First, a little bit about myself. My name is Andrew Oswalt. I'm a principal tax analyst with TaxAct. This is my 11th tax season with the company, which when you're in accounting, you kind of measure everything in tax seasons. I did work in public accounting for a couple years out of college, held my CPA license since 2012. Before that, I graduated from the University of Iowa with accounting and finance degrees. So go Hawkeyes and go Caitlin Clark if we got any college basketball fans in the house right now. And I'm based in Cedar Rapids, Iowa, so still in the Hawkeye State. As a tax analyst, what our primary role is kind of going through federal and state tax legislation, new forms, new instructions, new publications. We kind of comb through those and we look into how we can integrate that into the software, into the proper coding, updated on a yearly basis. So say a brand new regulation comes out, we look through that. How can we put that into the software so we can calculate taxes correctly, efficiently, and of course that we're in full compliance with all federal and state rules and regulations. With that, we have a lot of established relationships with the IRS and with state agencies. So a lot of back and forth. They give us feedback, we give them feedback, and what we're really looking for is the best outcome for their taxpayers to give them an efficient experience in software, and of course that the returns are accurate, and again, that we're in compliance with all laws and regulations. That picture of me is from 17 months ago. I think that picture of my daughter was 1 week old. Now it's been 17 months later. I have not actually lost that much hair. I just shaved my head a couple weeks ago. So, but that is me, believe it or not. So, all right, next slide. All right, so really the focus of this presentation is going to be mostly about the business tax aspect of filing a return, because what I want to define is freelancing, like independent contractors, a side hustle. You may consider yourself a gig worker. I know that term has been thrown around a lot in the last few years. But if you're selling things on eBay, especially if you're looking to sell for a profit, even if you don't consider yourself a business, in the eyes of the IRS, they may consider you a business, even if you don't like fill out some sort of formal paperwork, you don't have an official business name, you don't have an official business address. Well, IRS is still going to say, well, you're a business because you're selling things on a marketplace for a profit, and you're self-employed. So what does that mean? So that income is going to be subject to self-employment taxes, right? So if you think about like a traditional employer-employee relationship, you get your paycheck, and everyone remembers kind of their first paycheck, right? Because you had this big check you were expecting, and then you find out about federal income tax being withheld. If you're in a state with income tax, state tax withheld, and then of course Social Security and Medicare tax, which are the payroll taxes, right? And then you're like, look at that check, and like, oh, it's a lot less than I expected. Well, Social Security tax and that Medicare tax, that's really what makes up self-employment tax. And so when you're self-employed, you don't have an employer withholding that tax for you. So as a self-employed person, you're responsible for the employer share and the employee share. So that self-employment tax really comes out to 15.3%. Now, you're going to get a deduction later on for 1/2 of that. That's going to reduce the rest of your income on your return. So you're not taking the full brunt of that 15.3% tax. But for a lot of folks that filed as a small business income for the first time, they're kind of surprised when they file that return, and they're like, there's a little bit more tax on there than they expected, or maybe their refund's a little smaller than they expected. And that's generally because that self-employment tax is calculated in addition to the regular income tax that applies to the rest of your income. So that's definitely something to consider for self-employment income. Now, that being said, there are different ways to reduce your self-employment income, mainly being through business expenses, aka deductions on your tax return, which reduces your self-employment income. And then, of course, it reduces your self-employment tax. So if you are in the position where your small business is making some money, you may need to consider making quarterly estimated payments, because again, no one's withholding federal income tax for you or state income tax. So you might have to consider making payments throughout the year on a quarterly basis, so once every 3 months, to kind of cover that, because the US tax system is a pay-as-you-go system. So that's why we have withholding every paycheck that you get if you're a traditionally employed employee. If you do not pay enough throughout the year, you may be subject to an underpayment penalty. Now, a lot of software, and I'm going to talk mostly about TaxAct because I'm a little biased in that regard. But we do provide a worksheet for you to calculate your estimated tax. So like for tax year 24 that we're currently in, estimate your total income, kind of determine if you do need to make estimated payments or not. And you can set those up electronically, or you can pay with check, a couple of different options there. Also, it is possible that if you are traditionally employed, but also have a side hustle gig, that you could potentially ask your employer to withhold a little bit more from your paychecks. And that kind of comes down to, what kind of relationship do you have with your employer? Are you comfortable asking that on your W-4? Not that the employer necessarily has to know that, but that's also a possibility, is just to withhold a little bit more through your regular paychecks that you receive. Kind of hit on it already, but business income, subject to both self-employment tax and regular marginal income tax rate. A little bit of a double whammy. We'll talk about ways to reduce that here on the next few slides. All right, so first, though, I want to talk about reporting eBay and other income. And the main form that I want to talk about first is the 1099-K for credit card transactions, generally within some sort of marketplace. And here it's going to be a focus of eBay. So this form has been in the news a lot the last few years. There's been some changes, and those changes kind of got pushed down the road. So for tax year 23, so last year, and we're in filing season 24 for tax year 23 right now, the threshold that the 1099-K is required to be sent to you has remained the same, and that's $20,000 of income from over 200 transactions. So that's not any different from the prior years. Okay, and that's when it's required to be sent to you. So I don't know what eBay's practices necessarily are, but you may receive a 1099-K even if your income is less than that or the transactions are less than that. Now, here's the important piece. Even if you don't receive a 1099-K and you had income, you still need to report that on your tax return. You're still the one who's responsible for keeping track of your income and reporting that on your return. So don't receive any forms, but you had income. You should be reporting that on your tax return, right? Okay, so here's where the 1099-K changes start to come into play. This is for tax year 24. So this threshold is going down to $5,000. Okay, so pretty big difference. Still a decent amount of money, but much smaller. So more people are going to be receiving 1099-Ks and some that did not expect to receive one, right? Again, you should be reporting that income regardless if you receive the form or not, but this is going to push more people to come into compliance and actually report that income on their tax return. Okay, that's tax year 24. It's the current year, so all the way through December 31st. I do see a comment there too. The threshold in Virginia is much lower. You are right. This is mostly focused on the federal aspect, but that's a really good point. You should always check with the tax professional about the thresholds in different states, because that's a great point, Tim. And I know we have some blog posts on our website too about that. So good call out there. Okay. Anyways, for tax year 25, so looking further down the road, that's where this threshold goes all the way down to $600. And I'm sure most of you on this call are kind of aware of that, because 1099-K is a big part of the eBay marketplace. But $600, a lot of people are going to be receiving this form. Even more people are going to be coming into compliance, reporting that income on their return. I think originally last year it was supposed to go into effect, but there was a lot of pushback from industry, from taxpayers, payroll industry that, hey, we need more time to implement this, because it's a really big change going from $20,000 to $600, right? That's a significant change in the threshold. So kind of glad they implemented this kind of transition period. Hopefully it'll kind of ease the burden on taxpayers. As a small business, there's a few other forms that you may receive too that are kind of more obsolete in terms of just a side gig or kind of these online marketplaces. But there's the 1099 NEC, which is for non-employee compensation. This is more likely received by someone who's just like a traditional contractor role. So not an employee of a company, but just working a long-term contract as a contractor. They'll receive this form. And again, that's self-employment income. And then there's the form 1099 MISC, which is way less common than it used to be. Generally, there's a box 3 on that form that reports a lot of times it's self-employment income, but really that form is used more for miscellaneous other income that's not really self-employment income. So we don't really see that as much anymore. And last bullet point, it's kind of a rehash of some of the important points I've already made on this slide. But if you have income and you need to report that, otherwise you're running into risk of being out of compliance. And there's always that rare event of an IRS audit or examination where they're going to ask for all your income, even if it's not on a form that's reported to you. Okay, so let's start talking about deducting expenses for your business. And the second bullet point there is worded a little weirdly, but expenses that are deductible, aka deductions. That's what reduces your business income. So it's going to take down your self-employment tax and your regular income tax. Now, in terms of expenses, I'm going to use the terms ordinary and necessary. I'm not going to do a super great job of defining those because they are really changed from business to business. You guys will know better what is ordinary and necessary in your line of business. And there's been a lot of tax litigation over the years to kind of determine what that is. But if you can make a reasonable case that an expense is ordinary and necessary in your line of business, then I say go for it, deduct it, write it off as expense on your Schedule C. Just have the proper documentation behind it, right? It really comes down to good record keeping. That can be handwritten ledgers. It can be some sort of software solution. We know there's plenty out there for bookkeeping, record keeping. If you're an Excel wizard, like Excel a lot, that's certainly a viable option. Handwritten receipts, a notepad. I'm not recommending that one, but even when I worked in public accounting, we still had folks. I worked at a larger firm, still brought in shoeboxes full of receipts, and you always kind of hear that as a horror story. It still happens, even in this digital age. You get folks that do that. It's not the best method, but hey, at least it is something. And the other thing that's important with record keeping, consistency from year to year. If you start being inconsistent with how you're keeping records from one year to the next, that is a little bit of a red flag. So keep that in mind. Just have some sort of consistent method, whatever that method is. Try to stick to it, and that will help you in the long term. The last bullet point on this one, my director always says this in every presentation that he does, and I love it. The tax return itself, it's kind of the easy part. It's all the hard work's really done leading up to the tax return. That's where you're doing your record keeping, you're recording your income, you figure out your income statement, your cash flows. That's all outside the tax return. The tax return is just really data entry if you've done everything before that. So if you made it that far, you're in pretty good shape. And so, I love that line. But I have a screenshot here of a Schedule C, which I haven't really talked a lot about the Schedule C itself too much, but it really is just part of the Form 1040 returns. Everyone here has filed a Form 1040 individual return or something similar. And the Schedule C is just another form that goes along with it and flows into your 1040. So you calculate your self-employment income here on the Schedule C. I don't know how well you can see it, but towards the top, there's some basic questions. If you have a business name, you'd enter it there. If you have an EIN, which generally only have one if you have employees. And then a couple other miscellaneous questions of sorts. But then you have your income section, you have your expense section, and there's some more to it towards the bottom, with other expenses and the home office deduction. But it's generally what we consider a disregarded entity. So it all flows into your 1040 return, and all the income and expenses end up on the 1040 return. Even folks that have actually filed the paperwork to be a single member LLC, which is just providing them a little bit of extra liability protection in case the business, has debts that are due. Others can't go after their personal assets. Even if they file it as a single member LLC, they generally file a Schedule C as a sole proprietorship. Sometimes there are single member LLCs that file as a corporation, but for the most folks, a Schedule C is kind of the way to go. Easiest to file. It's not a separate file. It's all part of that 1040 return. I did see a comment about the hobby loss rules. So generally, I think it's 3 out of 5 years. So if a business keeps showing loss year after year after year, well, the IRS may end up taking a look at that and be like, are you really in business for a profit? And they may determine that you're not. And if that's the case, you can't deduct any losses on your return. Now, if you have income from your hobby income, it's what they're going to determine it's a hobby. Yes, you have to report that income, but if you have losses, you can't. So generally, you need to start showing a profit 3 out of 5 years in order to qualify for Schedule C and show a business loss. if you do have a loss year. Also, if you think about it, like if you have 5 straight years of losses as a business, are things going to turn around or not? So if like from a financial perspective, like how can you continue on if you keep having losses? And there are certainly cases where that's completely true. But just, keep that in mind as well. And then you think about it. I just had a thought and I just lost it. It happens all the time to me. That's okay. All right, let's move on to the next slide. All right, so I want to talk about some certain expenses that we have that you can deduct on your Schedule C. So someone did ask about the home office deduction. I did see that in the chat. So this is first on my list because we need to be careful with it. So to claim the home office deduction, you do need space that is used exclusively for business. That's key. This is one deduction that does raise a little bit of a red flag for an IRS audit or IRS examination when you claim this deduction. So like if I was self-employed and I'm working here in my den, I do not use this exclusively for business. I have a TV behind me and hang out here with my family with a fireplace. I cannot take this whole office and claim it for the home office deduction. Now, if I have a filing cabinet here in my room and I use that exclusively for business and I'm self-employed, then yes, I could potentially claim a home office deduction based on the square footage of my filing cabinet. And let's say my filing cabinet is 20 feet, that's big. But under the simplified method, it's like $5 per square foot. So I'd be looking at a $100 home office deduction, kind of using that logic. And that's perfectly fine. But what you need to really be careful about is claiming a whole room that you're really saying that you're using just for business purposes. Now, if that is the case, if you do have a home office exclusively for business, then you could look at potentially deducting a portion of like the real estate taxes, the mortgage interest, other utilities in your house, and allowing a portion of those as a business deduction on your Schedule C and reducing your self-employment income. So there certainly are legit cases for claiming a whole room out of your house. The second point, internet really flows into utilities with the home office deduction, like a phone bill. So my cell phone, if I have a cell phone that I use for both personal and business use, it kind of depends on how you want to report that in terms of determining what's personal use and what's business use. So whether you're using some sort of app or just, again, handwritten notes to try to figure out what portion of your cell phone did you use for business, for clients, for customers, even texting, you could deduct a portion of your cell phone bill for business purposes. Vehicle expenses, same sort of concept. There's a lot of apps out there and mileage logs for keeping track of business miles versus personal miles. Same thing. There is a standard mileage rate. I actually cannot remember what the 2023 rate is. I want to say it's around 57 cents. Taylor, Casey can put in the chat what the correct number is. But the standard mileage rate allows you to deduct so many cents per mile for business miles driven. And then while you're driving for business purposes, say you're going out to meet a customer, deliver an order, if you have to pay a toll or a parking meter, that is a legit business expense, is writing off the parking cost while you're driving for business purposes. Then a couple other items, cost to attend conferences, seminars, training. So again, if I was self-employed and I go to a continuing education conference that's like 3 days long, I could write that off as a business expense because it is furthering my education, meet my credentials for like my CPA license. And then I don't know if there was a cost to attend this or not, but like, yeah, if you're self-employed and you're attending this conference, again, I don't know if there's a cost, but you could potentially deduct that as well. Website fees, I'm sure there's some sort of charge on using the eBay marketplace. That's a legit business expense. Surely write that off. Any sort of advertising that you do to reach more clients or more customers, I would certainly write that off as a business expense. And just got to keep in mind, ordinary necessary. I'll say it again. If you can just prove that those expenses have a legit business case, then you can certainly consider taking that as a business expense and deduct it on your tax return. All right. So I've kind of gotten to like the end of the formal presentation. I do want to talk about the deal we have going on right now for eBay sellers. So right now we're offering 25% off the federal filing with TaxAct. I provided the link there. I think they'll send it out again after the check-ins over to access our link. Obviously, I know it's March 7th, so I'm sure there's quite a few people that have filed their return already. We actually encourage early filing, both from the industry and from states and IRS, just because of you're less likely to be a victim of fraud if you file early, right? No one can steal your SSN, which unfortunately is just a thing that happens. But now through April 15th, take advantage of this offer. And then of course, if you file extension, you get through October 15th. What I was actually going to want to do was do a little demo of the site for you guys and show you kind of what it looks like, what the interface looks like. So I'm actually going to stop sharing for a second. And I'm going to jump to another screen and see if I can do this efficiently. All right, cool. You guys can see the eBay, welcome eBay seller screen for TaxAct. Okay, let's see, yes. Cool. So I will say, I'll be completely honest with you guys, you probably are going to want to jump into the self-employed SKU because that is going to include business income, freelance income. You can start in one of these lower tier SKUs, but when you get to the Schedule C steps, it probably is going to prompt you up to the higher SKU. And again, the 25% off will apply at checkout. So you probably see $99.99 when you're first in there, but then it'll go down once you get to the checkout screen. I'm going to go ahead and click Get Started. Let me sign. I have created an account already. That's the problem is I have like 100 different accounts just because of all the testing that we do. And I'll open a return I've already been working on. Now, if you are a prior year TaxAct user, when you first log in, you will be prompted to import your information from the 22 return. It's a pretty seamless process. So I want to make note of that the experience is always going to be a little bit different, tailored on certain experiences, right? Now, if you're not a prior year TaxAct user and you're curious about it, we do offer a PDF import of prior year returns. So if you use someone else like TurboTax or TaxSlayer or Block, you can have a PDF copy of your return, upload it here, and we do capture a lot of the basic information, spouse, dependents. If you have some sort of carryovers, like a capital loss carryover or a credit carryover, we'll capture that. I know that's one of the biggest hangups of trying to change software providers is that they have all your data, right? So that's why it's kind of hard to part. But the process is pretty seamless, well tested and everything. So, and there's no harm just trying it out too. If you guys want to take a look at the experience, get rid of the honey guy up here. So I just wanted to make a little plug for that. Real quick, so I've already entered some basic information. I got George Washington's return here, and I selected him as married to Martha. Okay. I don't have any dependents entered right now, but this is this kind of look and feel. This is like the real thing that you guys will see if you jump into the software. Do a little summary of the basic information. But what I really want to jump to is our Schedule C small business experience. So I'm going to jump a little bit. I'm going to hit this federal tab over here on the left-hand side. We'll go to income, business income right here. So I do have some stuff entered already and shown in the summary. So this is like the total self-employment income that I'm currently reporting on my return. The business name, he's selling wigs. So I put clothing accessories, retailers. Let's look at that. It's going to ask who the business belongs to. My business name. Don't have an EIN. My business address is just my home address. So I did leave this blank on purpose. Which kind of makes me think about if you do rent an office space, That's also another deduction that you can look at in your return too, is the cost of rent. I know co-working spaces are really big right now. I myself actually had some co-working space a couple of years ago when my house was being repaired. So that was another one I didn't mention in the presentation, but rent like that could be certainly an expense. So we have all these categories you can choose from that maybe kind of you're trying to figure out where exactly you fit as a small business. You're really not sure how you classify yourself. Even if you're still not sure after looking at all these options, we'll help you get it sorted out. I chose that I'm a retailer dealer because I'm doing wigs. And again, we'll kind of help break it down. What kind of retailer are you? There's all these options here. And this is kind of really helping us find like your business activity code, which a lot of people struggle with when they're filing a tax return. Quite a few options here. Now, so I get to the income section, and we'll probably call it wraps here on the demo. Counting method. Most people are cash method. Reviewing the income section. So I said I had a 1099K and I had some cash or check that wasn't on a 1099. So this is that situation where I'm like, I know I have income, but I didn't receive a form. So where do I report that? And we have a nice little section here that helps clear that up. And so here's the 1099K I've already entered. I can review it. And pretty straightforward. Enter who issued the 1099K to me, their information. Excuse me. And I just entered $25,000 from box 1A. If the state was reporting state withholdings too, I could enter that here, or federal withholdings. Didn't report any. And then there's another section for just other gross receipts that were not reported to you on any sort of form. Again, that needs to be reported, but where? Right here would be the space. And let's do a quick look at deductions, and then we'll call it good. So we try to break down what are the most commonly used expenses, especially based on your prior selection of what kind of business you selected that you were. So we show a few if you want to see them all. You can see here, I've selected commissions and fees, which includes online seller fees, office expenses, advertising, business use of home. You can see all these other potential expenses. So we kind of help you work through that to find out what you can deduct and what you can't. Advertising expenses, commissions and fees. And here's some supplies. Okay. And then home office deduction. Yeah, I guess I can jump into that. I chose a simplified method, which again is just basically taking the square footage of your home, or sorry, of your office space, and taking it times $5. As long as your square footage of the home is less, or of the business area is less than 300, which mine's only 20 because I used kind of that filing cabinet example. But I'm going to stop sharing. And I think we just have a few minutes left. Let's see. I know there's been a number of questions. Like I said, most of those questions probably going to just take back, try to answer offline. I think there was a question about 1099K and the income. If that income reported to you on the 1099K has already had the taxes taken out of it, so basically eBay is like reporting it net of taxes, then there's really nothing else to do with the taxes. Now, however, if the taxes were included in that income amount on the 1099K, yes, you would want to report taxes paid deduction on your Schedule C to kind of net offset those. So yes, I see. Yes, they were included. Then you would also want to report a deduction on Schedule C showing the amount of taxes. That way they cancel out. Good question. Cost of goods sold, I did not mention specifically. There is a section on the Schedule C specifically for cost of goods sold, and that'll walk you through what's your beginning inventory, ending inventory, purchases, any items that you use for personal use. There's a nice little flow to that. It's pretty straightforward within the Schedule C stuff. So good question. see shipping and fees. If those are included in the amount that reported to you as income, then yes, you'll want to deduct those out too on the Schedule C. All right. Well, I think we've kind of hit our time since we did start a little bit early. So I think we can go ahead and wrap up. But I do appreciate you all being here with me this afternoon. Hopefully you learned maybe something new. Hopefully you consider checking out TaxAct. And like I said, a lot of those questions that were in the chat, we can take back. We can follow up with you guys. I'll get in touch with the folks from eBay, and we can help get the answers that you're looking for.